Hello. We've seen quite a bit of volatility in the markets over the last couple of weeks, and a lot of it is being driven by some of the economic data that's coming out right now. Things like the jobs numbers in the US and the inflation numbers being published. And I think one of the reasons we're seeing volatility in markets is that it's very difficult for investors and economists to predict what these numbers are going to be like. When we are coming out of such a steep recession, coming out of the pandemic, we're going to see extremely high levels of growth just because we're coming from a very low base. That's the same with inflation. We're going to see high levels of inflation because this time last year inflation was very low. Prices are just recovering back to where they were. And it's the same with company earnings as well. We're seeing very high levels of growth in those company earnings compared to the previous quarter when economies were largely closed and compared to this time last year. And it is really difficult to work out, I suppose, as an investor, how much of that really fast level of growth is just a one-off and where things will go from here. And that's why I think you're going to see some volatility in the markets, because as you come out of such a steep recession, we're going to see big growth numbers and it's going to be very unpredictable. But I wonder as well, if you think about it, I think we're almost at peak growth. Not in terms of we're going to carry on growing from here, but in terms of the pace of growth. We've probably seen the fastest part of it already, or certainly in the next few months we'll see the fastest part of that growth. And the same for inflation. We'll see the highest inflation numbers over the next few months. But markets are always forward looking. We're always trying to work out what's going to happen in 6 months, 12 months time, when some of that those low base that drops out of the data. And that, I think, is quite difficult for investors right now. So I do think in the short term we will carry on seeing quite a lot of volatility as we try to adjust and try to work out where we go from here. As I say in this month's newsletter though, I think trying to predict anything in the short term is a mug's game. It's absolutely impossible. What we need to do is focus on the long-term trends that will drive investment markets over the next decade, for example. Things like climate change and the knock-on effects and what effects that might have on legislation, taxation, and how it will affect companies. Things like aging populations and that we know is going to happen and how that might have an effect on how people spend their money. So all these things we need to look at and try and take into account of what's going to happen for the next 10 years, because in the short term I think things will remain extremely unpredictable. But for now we're pretty optimistic. We can see the economies are reopening, and we think, hopefully we don't get any more bad news with variants and things of the virus, and so therefore the economies will carry on that recovery. But we just need to be a little bit careful in terms of the stock market, just because it's so difficult to interpret all of those numbers right now. Thank you very much.